Russ, while I'm doing this, can you tell us a little bit about Your Space America Self Storage?
My name is Russ Colvin. I'm CEO and President of Your Space America. In our presentation today, I'd like to start by telling you a little about myself, about our company, and why I believe Your Space will be a great partner for you. We will also discuss track record. Given the short presentation today, I'm available anytime you need to talk after the presentation by personal cell phone or email. I have been in commercial real estate finance and investment for 42 years. I'm kind of new to it. 22 years as commercial real estate lender, banker, and 20 years in commercial real estate investment, with the last 11 years exclusively in self-storage. I have developed multiple successful self-storage projects across multiple geographic areas from the West Coast to the Midwest to the South and the East Coast. I'll provide you some brief detail on those projects and then discuss the Phoenix project, why we think it's an excellent opportunity. Next slide. This next slide is the disclosure. It's always important to read disclosures, so please take time and read the disclosure. Next slide. As I was just alluding to a few moments ago, we created Your Space to create an industry-leading self-storage investment platform with an eye towards longer holds and maximizing returns for investors. We have a great team, strong management, underwriting, analysis, as well as excellent industry relationships that allow us to acquire great projects and manage them to their maximum potential so our investors can maximize returns. Next slide. The self-storage industry. The self-storage industry has shown itself over a long period of time to be a very persistent, durable, reliable commercial real estate class. And in fact, as I'll show you in a few moments here, perhaps the most successful of any commercial real estate class. Definitely a strong performer over a long period of time. Next slide. Next slide. Fundamentals, REIT sector fundamentals. This is an interesting bit of information. Next slide. Next slide. So for the past 27 years, from 1994 to 2021, self-storage was the top performing product type in the NAREIT index, the National Association of Real Estate Investment Trusts, over nearly 30 years, outperforming every other major type of real estate in the NAREIT index, including industrial, office, retail, residential, all of the ones you see down there below, self-storage over on the right in green. I think that speaks once again to its reliability as an investment. Next slide. CMBS data. This is another interesting indicator of the safety and reliability of self-storage and investment. Next slide. This graph is basically showing the delinquency over a 10-year period for CMBS, commercial mortgage-backed securities. And it has basically every property type in major property type in here, from multifamily to hotel to healthcare, industrial, office. And it shows the delinquency rates from 2006 to 2015. And if you'll note here, 2009, 10, and 11, which was all related to the Great Recession, self-storage by far had the lowest delinquency rate of any commercial real estate type. If you look at self-storage and then look at the others here, most of them were exponentially higher than self-storage. But again, this points to self-storage as an investment, as a safe investment. Next slide. Next slide. This next slide is our management team, myself as CEO, Billy Haiti as chairman, corporate counsel Russell Marne, our chief financial officer Keith Merrill, our acquisition team, our board of directors, and our board of advisors. And I note that we have two industry leading professionals on our board of advisors, Jeff Agashi, the regional president of Janus, and Brad Danager, the chairman and CEO of Arco Murray. Next slide. This next slide, in the following slides, I'm going to show you some case studies for projects that have been sold and a few that are still ongoing to give you some ideas of the projects we've done and the returns. Next slide. This next project is in Rancho Cordova, which is a Sacramento market. This was a project that we did as a conversion. It was a envelope processing facility. We turned it into probably the nicest self-storage facility in this market. Total returns to investors, 42.12%. Was sold in 2019. It sold not too far after completion to one of the self-storage REITs, SmartStop, but again, it's a very successful project. Next slide. This next project, also in the Sacramento market, is called Pell because it's on Pell Avenue, Pell Circle. This was a project that was a conversion, and it turned out to be a beautiful project when it was finished. This is one that we got to a high occupancy and we continued increasing rents and maximizing cash flow. It was sold in 2021. Total returns of 27.21%, so another successful project. Next slide. This next project, Peabody, is in Peabody, Massachusetts, which is a neighborhood in the Boston market area near Salem, Massachusetts. This was a conversion project, and when we were finished with it, it turned out to be probably the nicest self-storage facility in the market. Was sold in 2021 at a sub 4% cap rate, right below a 4% cap rate. So investors did very well with this. It was 39.01% total return for investors. Next slide. This next slide is Springfield, which is Springfield, Massachusetts, the third largest city in Massachusetts. This was a conversion project, one that we turned into probably the nicest self-storage facility marketed facility in the area. And it's the only self-storage facility in the area that actually has a drive-in facility. So it could be snowing outside and our customers can pull in, load and unload in a climate controlled area and then pull back out. So they're essentially they can utilize their self-storage regardless of the weather outside. So it works very well in an area like this where there's a lot of snow during various times of the year. Next slide. This project was done in the North San Diego County, California market at Escondido. When it was completed, a lot of people have referred to it as the nicest self-storage facility in North San Diego County. I don't disagree with that. The return was a little lower here because my partners decided to sell it too soon. But that's another subject we can talk about offline. But it was a beautiful project, in a great location that turned out very successful. Next project. Next slide. This project is in Worcester, Massachusetts. Worcester is the second largest city in Massachusetts. This was a conversion project, one that did very well. Our partner bought us out, but this was a former metal processing facility that we turned into the nicest self-storage facility in central Massachusetts when it was finished. This also had a drive-in feature. We spent about $1 million adding the drive-in feature, but I think it was well worth it. And it, made it very convenient for customers, regardless of the weather outside, to pull in, load and unload, and exit from the building. Again, the only property in the area with such a feature. Next slide. This is a project that's currently under development in Las Vegas. Construction just recently began. this will be, when it's finished, the nicest facility in this area, but it turned out it's going to be a very nice project. Next slide. Las Vegas Owens. This is a project that we should begin construction probably in July, right on Interstate 15 in Las Vegas. I think this will be the nicest facility in that area when it's finished for an ongoing development project. Next slide. This next slide is also Las Vegas market, out by Nellis Air Force Base. It's going to be the largest RV and boat parking facility in Las Vegas when it's finished, and I definitely one of the nicest facilities in Las Vegas. But this gives you an idea of the kind of things that we're doing. Next slide. This next slide is the subject property in Phoenix. And this is a rendering on here of the project, and I'll show you another one in a moment. But this is going to be also a area leading project when it's finished. One of the nicest facilities in the Phoenix area. It's a pretty large facility, 168,599 gross building area and about 125,000 net rentable. About 1,225 units with a 1,300 square foot office. I think probably everybody on the call is familiar with the growth that has occurred in this market in the last 4 decades. An interesting fact, within a 5-mile radius, there's 17,000 residential units in planning or development, which if you assume three people per unit, something like 51,000 people. So this project is located in the downtown area, 650 feet from Diamondback Stadium. It's going to be 50 feet high. So whether you're driving into downtown or you're at Diamondback Stadium or you're several blocks over, anywhere in the area, it'll be easily recognizable. Next slide. This is another view of the property, a different rendering, but really it's going to be a beautiful project. Next slide. This gets into, once again, the project, 4 stories, 168,599 square feet, 1,225 units. We expect our final approvals the end of Q3 for permit. So September, October, we'll be beginning construction. Project cost is $26,876,000. We're looking for $9,406,000 in equity. I think the returns to our investors is going to be about 29.1%, which is about a 2.77x over 5 years. And the way we've structured this is it will be a minimum 70-30 to our investors. So our investors will achieve their 10% preferred return plus 70%. So I think it's very compelling on the return front to our investors. This is going to be a Generation 5 self-storage facility, you know, among the newest type of self-storage facilities with high security, and should be very successful in this marketplace. Next slide. This next slide, some map slides, and you can see the proximity. The top photo on the right here, you can see people standing in front of our site, Diamondback Stadium down the street. You can see downtown Phoenix map here with our facility in Chase Field. So it's going to be a well-known facility in this market. There are not a lot of high-quality self-storage facilities in this market. There's a nice facility from Public Storage nearby, but other than that, it's mostly older, lower quality, non-climate controlled facilities. Next slide. This slide is representative of what I mentioned in terms of the growth in Phoenix. The MSA went from 1.6 million in 1980 to almost 5 million in 2019. The population in Phoenix went from a little less than 800,000 to almost 1.7 million in that same period of time. It's an affordable place. As you know, the new CHIPS Act, there's all kinds of new jobs being created. A lot of people talking about it, going from the number 5 largest city in the United States to number 4. Next slide. This next slide is a site plan for the subject property, and you can see it's a rectangular shaped site. You can see the cut-ins for the two loading areas in the project, and down on the one end is the office. So you'll have 3 loading areas and plenty of parking, so everybody will be able to reach their unit pretty easily because of the loading and parking right in the front there. Next slide. This next slide basically is a summary of the project. Your Space America is the developer, the address 815 901 East Jackson in Phoenix, Class A self-storage, 1.78 acre site. Again, the total equity required $9,406,000. We're planning to close the project June 15th. We've had it under contract since December of 2021. Planning to start construction, we're estimating October 15th. And our lease up would start, we're estimating approximately 1 year later, with construction completed at that time as well, with stabilization on or before November of 2027. And a sale date, this could be held the entire 10 years, and we'll get to that in just a second, but it will be obviously the decision of the investors. I would recommend the long-term hold for investors. And then down below, we talk about equity. We're going to put in 10% of the equity. Investors will put in 90%, and is the breakdown of the various costs: land, financing costs, hard costs, soft costs, working capital reserves, which is interest and expenses while the property is being developed and leased up, and developer fees. Next slide. The next slide is a breakdown of project costs. I won't go into all that right now, given the short timeline, but you can look at it in more detail, and happy to discuss any of it offline. Next slide. The next 2 slides are a 10-year pro forma that was prepared by Life Storage, who we've been talking to about management of the property. The interesting thing is that the NOI at year 10 under this pro forma is $2,823,000. If you assume a 4.5% cap rate, which seems very reasonable for this type of property, given the location and all the fundamentals here, at a 4.5 cap rate gives you a value of about $62,744,000. Also, we did an analysis assuming that we refinance the property shortly after completion and try to return most capital to investors. There's about $7 million in cash flow, net cash flow during that 10-year period. So given this potential purchase price and the cash flow, investors' total returns during that 10-year period be about $42 million on a $9.4 million investment. Pretty compelling. Next slide. Okay, next slide. This next slide, construction and management, and I'm kind of ending with this because it's important. We use a company called Arco Murray as our contractor. They are the 5th largest design build firm in the United States. Have done multiple projects with them quite successfully. And in fact, their chairman and CEO is on our board of advisors. A great firm, and probably the biggest in self-storage. They'll probably do $4 billion in this year in construction, and about a dozen different products. Self-storage management, we use the self-storage REITs, the publicly traded REITs, for management because they are the best in the world at managing self-storage. These 4 REITs, Public Storage, Life Storage, CubeSmart, and Extra Space, have a combined market cap of approximately $100 billion. They're all traded on the New York Stock Exchange, and they're all excellent at self-storage management. Public Storage wants to manage this property. So does Life Storage. Public Storage doesn't manage anything, nor does Life Storage. They wouldn't want to own it someday. So they don't just take on projects to manage unless it's something they'd like to own in the future. Not that they'll be able to, but unless they would have that interest, they don't want to manage it. So it tells you something. We want to do the very best in terms of construction, the very best in terms of management, great site, great location, so that we have a successful project. And again, As I said at the outset, if anybody would like to talk to me about anything here in greater detail, please call me on the cell phone anytime you like or email me. And by the way, that is true after you invest as well. Call me or email me anytime. And thank you all very much for your time today.
Russ, well, thank you very much. I believe this is the first self-storage presentation that we've ever had on any of our OZ pitch days. So great numbers you have there. Great project. Thank you, Russ, so much. We run out of time. If you have any questions for Russ, please do reach out. But Russ, thanks for partnering with us on OZ Pitch Day today. Really appreciate it.
Bye-bye.